This month, Life Insurance Strategies Group is in Barbados, and we're attending this country's annual risk conference. As many of you know, I sit on the boards of 3 life insurance companies here in Barbados. And risk has been on our minds quite a bit at Life Insurance Strategies Group. If any of you are following our Substack, you know that we've been very interested in the amount of private credit that life insurance general accounts have been invested in. And if you're following the news about private credit, not all private credit investors are very happy. Some are trying to exit for the doors, but finding those doors locked. With lockup periods, that means you can't get the investment out, perhaps for a period of years, and then after that time, perhaps in only increments. So if a private credit investment goes bad, it could be some time before an investor, like a life insurance company, gets out of it. Now let's think about financial health of general accounts of life insurance companies. Now, as many of you know, there are 2 types of life insurance company structures. One is a stockholder company where you have shareholders like other public companies, and the other is a mutual company, which is owned by its policyholders. Now, you would think because a stock company is more transparent in its reporting, that the financial health might be better. Well, you'd be wrong. We're now seeing, after 20 years of stock companies, or 25 years rather, that this allegiance isn't so much to policyholders as to shareholders, which means value is driven to shareholders as opposed to the policyholders. At mutual companies, however, they seem to be more financially strong, with value going to those policyholders. So to bolster sort of returns, remember, in the last 20, 25 years, we've seen a decline in the interest rate environment, and it's bounced back a little bit, but we've had huge general account portfolios earning very little interest rates, and that makes life insurance products, kind of unattractive if they're not getting high rates of returns, and the premiums have to be higher to sustain those policies. So the carriers now look to private credit, and if you look at how much private credit, it's absolutely stunning. So private credit can typically give very high returns, so that helps the life insurance company balance sheet. Well, that's all fine and good until we have problems with private credit. Are insurance companies monitoring this risk? That's sort of the question that we want to know, and we're not getting that transparency. So if you're interested in a large life insurance policy, what you need to be thinking about is the financial health of the insurance company. Now, I'm not to say all shareholder life insurance companies, public companies, are bad. You just need to pay attention to make sure that policyholders are receiving value and not having value taken away to benefit shareholders. Remember, at Life Insurance Strategies Group, we don't sell products, but we help our affluent, individual, and corporate clients make decisions involving complex life insurance transactions. If we can help you, reach out to us at lifeinsurancestrategiesgroup.com.